Ladies and gentlemen, we're going to keep up the pace, and I'm going to go straight into introducing our next session. Again, a wonderful presentation that's been put together by a gentleman who's come in all the way from the States to speak to us. The particular focus of this moderator session with Philip Bahoshy, the CEO of MAGNiTT. He's going to be with our special guest. We're diving deep into Flashstorm of investments from the West, analyzing the reasons behind the influx, a very intriguing title for the next session. We have Jack Selby, the Managing Director of Thiel Capital and founder of AZVC from the US, ex-big Hollywood producer. Please do give the two gentlemen a big round of applause as they take to the stage. Thank you very much.
Well, absolute pleasure to be here, as always. Today I have Jack sitting next to me. Great person to have here in the region, something I've been advocating for a lot of the time, that we need people from outside of the region to kind of tell us a little bit more about what we need to learn from abroad. I'm just quickly pulling this up. So, brief introduction. I mean, my name is Philip Bahoshy. I'm the CEO and founder of MAGNiTT, a venture data platform. And we released our report earlier this week. And so Jack Selby is the managing director of Thiel Capital. He's one of the few that can be referred to, and if I'm correct or incorrect, please let me know, as part of the PayPal Mafia. And we have our Kareem Mafia here, and it's one of the original members and employees of that, which I think is a really important learning lesson for us here. And what's more interesting is in his role, he was international and corporate operations manager. So we had a quick conversation the other day, and you've been coming to the region from 2008. So a lot of learning lessons that come from that. Before we jump into the conversation, the subject is Flashstorm of investments from the West, analyzing the reasons behind the influx. And so I thought I'd just put a little bit of context in numbers, because I think that there is a little bit of a misconception here. The report we published, $1.3 billion of investment, 286 deals. And yet when you look at the total number of investors, it's 244 different institutions, which is 44% lower than last year, and only 36% come from outside of the region. So firstly, thank you very much for being here. I think it's great to have you. But to the point of, if you read the media, FT, Bloomberg, all of these international people coming to the region, and yet when we look at the numbers, the total amount of capital is actually quite minimal. What can you speak to from your standpoint of knowing the region, coming from outside of the region, with regards to this international interest in the emerging market space?
Thank you, Philip. And this is a slight edit. Started coming here in 2000, and so Sheikh Mohammed actually was one of our early investors in PayPal back in the year 2000. So I've been coming here for a long time, and the amount of growth and progress is truly remarkable. But to your question, you know, the global cycle has definitely turned. And so in the US, the cycle turned about 24 months ago, depending on how you want to define it. And so the deployment of capital, at least back in the United States, has slowed dramatically. And so I think it's natural that there is some correlation to that slowdown back in the US and in the West to here in the MENA region. That being said, and we talked about this the other day when we got together, I think the region has done a tremendous job of building out their ecosystem, especially with regard to the number of venture capital funds that are here locally in the UAE. And so I think some could argue that maybe there are too many venture capital funds. But frankly, if I had a choice between having too many and not enough or zero, I would take too many all day long, because you have to start somewhere. And what I think makes this place, UAE and Dubai in particular, so special is that it's a hub for talented entrepreneurs throughout MENA. Draw a circle around this region and go out as far as you want, whether it's Africa, South Asia, Central Europe. This is a place that's going to attract a lot of those entrepreneurs, and so it's a hub. So the slowdown, while I think it's related globally in terms of correlation, I think the growth path that you have here is very unique and to a large extent non-correlated.
And so when you speak to fellow colleagues of yours that are coming from the States, What are they seeing here in the region? What is it that attracts them beyond just the UAE? What opportunities potentially excite them to want to invest here in the MENA region?
Yeah, it's a good question. So, people talk about copycat businesses a lot, and they complain that, why do we have these copycat companies? Careem is a copy of Uber, so on and so forth. So let me give you an example specifically with kind of our PayPal example that goes back more than 20 years. So I was in charge of international operations, and so trying to figure out how do we set up operations in Asia and Europe, and then we thought about the Middle East. The Middle East is a very complex place. It's a very different culture coming from the U.S. I'm not Muslim. I don't speak Arabic. It's different, and I am not an expert at all. And so you sit back in the PayPal context in our office in Palo Alto, and you try to figure out, okay, I can come to the Middle East, but then I have to figure out the payment system in the UAE and Bahrain and Saudi and Kuwait and so on and so forth. And that's really complicated. And so it becomes a choice, as it does with any large tech company. Do you want to buy it or do you want to build it? And so for us, we said, listen, this is too complex. The opportunity cost is too high, given how we could spend our time back home with relatively lower hanging fruit. So let's let someone else try to figure out and build it here. And if they do build it here successfully, we will come in and buy it at a nice premium, and that's fine. And there's nothing wrong with that, because you have to start somewhere. And then if you buy that PayPal copycat, or you buy Careem, the Uber copycat, those people then have a great outcome. Like, so at Careem, how many young people made $1 million plus as an arbitrary number? I don't know, I would guess more than 100. So they learned how to work at a world-class company. They now have the aspirations that they want to be the next Travis or the equivalent. And they're young enough, they can go start their own company. And maybe it won't be a copycat at that point. So I think it's a great way to start the ecosystem and jumpstart the process.
I think it's a very interesting question. So when we look at that, there are a lot of companies that exist here in the region that are potentially struggling for exits. And you talk about the example of Careem. You have the example of Souk that was acquired by Amazon. So for any founders in the room, if you are an international startup corporate interested in the region, what should they be thinking about if they're building the company for scale to exit to an international acquirer? Are there specific metrics, geographies, points of reference that they should be looking to scale for?
So going back to the PayPal example, in the US, there's a phrase where you either can ask for permission or ask for forgiveness. And so when we were in the US starting PayPal, we were like this little speedboat that was doing circles around these big super tankers that would be the equivalent of the big banks like Citibank or the big card associations like Visa and MasterCard. So we were able to be very nimble. And we also were able to kind of tiptoe the different lines in terms of the regulations, because that's just kind of the culture in the United States, for better or maybe worse. Whereas if you were trying to do that same approach here or, say, Saudi Arabia, you would probably want to ask for permission first and not try to ask for forgiveness after the fact. And again, that's not better or worse, it's just a different culture. And so I think if you're a young entrepreneur and you're working in a sector that is heavy on regulation or government oversight, or however you want to describe it, you play by the rules, obviously. Get the permission. Do that, because that's culturally very difficult, especially for us to understand coming from the West, and build that business. And if you do that successfully, again, people from the West, people from Silicon Valley will come and buy you at a nice multiple for these outcomes that you talked about all day long.
We saw last year an example, or in recent years, Sequoia, that considered itself to be a global fund, that then decided to split up into the different entities across geographies. Is there a learning lesson from that for our part of the world? Should we be attracting US investors to the region, or should we be trying to get regional versions of international firms to deploy capital locally?
So I think the economic downturn globally is a good thing for this region, in the sense that, to the extent that you had VCs coming in from Europe or the US, they were parachuting in. They're not doing that anymore, or they're largely not doing that anymore, because what's happening is that so many of us back in Silicon Valley, we made investments in vintage 19, 2020, 2021, frankly at very, very overvaluations. And so right now, so many of us, ourselves included, are essentially triaging these companies that we made at very, very high prices. And this process is just in the beginning of sorting itself out. So we're back tending to our own garden, so to speak, triaging these portfolios, trying to figure out who's going to survive, who's not. It's very time consuming. So we don't have time to fly to Dubai and see if we're going to just parachute in and pick off the best company. Not that we could do that anyway, because I don't think that model works. Because again, I think if you're local as a VC here, you're going to know the people, you're going to know the culture. You should have a huge advantage over anyone who's flying in, whether it's Sequoia or anyone else. So I think net it's good. It's just a question then, you know, I think the VC community here is very robust. You're not lacking in capital. This whole region is obviously not lacking in capital. It's just a process, and it takes time.
I mean, I think that's something that we always say is that you can't really replicate Silicon Valley here in the region, and it takes time. One argument you could say is that there's no VC here in the region that's older than maybe 10 years. And I think we have a stat at MAGNiTT. There's 2,500 companies that received investment. There's been less than 6% that have exited. And that's not even necessarily a good exit. It was acquired, for instance. What are some of the learning lessons? What are the good learning lessons that we can take from Silicon Valley that we need to be patient for here in the region, that we can develop more success stories in the coming years?
So I think one advantage that you have here, in the sense that before the influx of the relatively newer VCs that are based here in MENA, because of the relative dearth in capital historically, it has forced entrepreneurs to have more of a focus of how to get to cash flow, break even, and profitability sooner than what they would be back in the States. So back in the States, you know, if you have a greenfield opportunity, you can raise money relatively easy, and you're just going to grow at any cost, any expense, and not worry about kind of the bottom line. Well, in this environment, like we talked about the other day, when interest rates are at 5% and not 1%, that's very, very different. So, you know, one of our colleagues from back in the PayPal days was Elon. And so Elon started SpaceX back in the mid-2000s. You know, starting SpaceX, Elon's an incredibly talented guy, that's basically a zero coupon bond, where you basically invest in the bond, you get no payments for 20 years, and you hope to get a huge balloon payment at the end of 20 years. Imagine trying to start that type of company now. And so, again, coming back to here, because there's this ethos of having to be cash flow break even sooner, that's fantastic in this environment because that's what you have to be. And that's what I think the folks back in the US, and I think overall, just as an entrepreneur, just think about, every day, think about how is your business going to be different in this massively different interest rate environment. I can't emphasize that enough. You know, for the last 12, 15 years, interest rates, basically money was free. Money is no longer free. So how does that impact your business? How does it impact your consumer? How does it impact your future investors? I think it's something central to think about.
And I think this is a very important point, and it's very rare that we can have people from outside of the region to give this perspective. You mentioned that the slowdown on the US venture market is maybe 24 months or 18 months. Let's try and look forwards if we can. Interest rates don't seem to be going down anytime soon. In fact, the rhetoric is higher for longer. Can you share your views and thoughts on what the global venture market is going to look like, at least in the next 12 months, and what we could anticipate here in the region from what's happening internationally?
So I was in a meeting yesterday, and we were talking about the massive shrinkage within the venture capital industry in terms of number of firms. So I think at its peak, say 3 or 4 years ago, there were globally something like 11,000 venture capital firms. And now it's shrunk to something like 7,000. This is your business, you know this better than I do. And I would predict, not too boldly, that it's going to shrink to something like 2 at some point. And so there's going to be massive shrinkage. One of the huge advantages that you have here is that this is the marginal allocator in the world. And so every venture capital, every private equity, anyone who's trying to raise money, I mean, people have always been coming here, but they're coming here in mass. The allocators here are getting deluged. And so that's a huge strength because these are your neighbors, these are your friends, you know all these people very, very well, so you're always going to be a capital hub. So whenever the IPO market opens up, I don't know, but you know, kind of like this last cycle, companies stayed private longer and longer and longer because they could continue to tap into late-stage private growth money. And again, because you're sitting in the backyard with so much of this capital, I think you're very well positioned in that regard.
One criticism you tend to hear from people from outside of the region is that the point that I made earlier, you haven't seen enough exits. In fact, if you look at terms of IPOs, you've hardly had more than a handful or 2 handfuls in the region. Knowing what you know about IPOs that happen in the US, what do you think needs to happen here to catalyze potentially more local listings of companies? Or is it such a bad thing that we don't have IPOs and acquisitions and M&A we kind of mentioned is the path to more returns for investors here in the region?
Yes, I think it's more the latter. I wouldn't get overly hung up on the number of technology IPOs from locally sourced and originated companies. I mean, if you can have them, that's great. But again, I think you can build companies here, and because this region is so unique, you're going to have the opportunity that folks are going to come in and want to acquire these companies. And that's just as good as an IPO, because what you want to do to continue this snowball, so to speak, to continue going, you want to cash out these entrepreneurs, these young people, these teams, and you want to give them some money in their pocket. You want to inspire them to become, you know, the next CEO of the company that they just sold, and then have that just keep going. And so the more that can happen, whether it's IPO, fine, or by acquisition, just as fine, equally as fine, it's equally good. So it doesn't matter, in my opinion.
It makes an interesting question that there tends to be an obsession with unicorns here in the region. Is that the wrong KPI and metric, or do you have a view on that KPI and metric, or as you're just saying now, any exit, good exit, is better than obsessing about the need for a unicorn?
Again, I think unicorns were the fascination during a zero interest rate time, and so it got clicks, it got eyeballs, it's fine. It makes for a good story, it's a sexy story, that's fine. And again, if you can have IPOs, that's fantastic, but I think having solid acquisitions with real numbers in terms of dollar amounts that come out, that then most importantly seed that next generation of entrepreneurs that want to go start the next Kareem or Souk or the equivalents, that's all that really matters. So how that actually comes about, I think, is less material.
Obviously, we had the 2008 crisis, you have the dot-com, and I'm sure that you've seen a lot of that firsthand from the US, where here you haven't necessarily had venture capital go through an economic downturn. Are there any historical trends we can kind of look towards in the next year or two that tend to happen when interest rates go up to 6%? Is there any positive lights in that space in terms of stage of investment that people could be looking towards?
So this is going to go back to what I said earlier, and again, this is an aspect where I think literally the region has a huge advantage over, because in the US and in the West in general, there's a mentality of growth at any cost. That mentality does not work when interest rates are 5%. It's fine when interest rates are 0, but because that mentality that has not existed here, and you have to get to cash flow even and pull yourself up by your bootstraps as quickly and early as possible, that's a huge advantage. So lean in on that. And again, on top of the fact that this region is essentially, you know, it is the marginal capital allocator, that's a great combination. And the fact is, I mean, I've been coming to this region for a long time. I have a place here. This place is booming. And I don't see any reason why it will not continue to boom. And people come here every single day. They realize it's a proper place. You can do proper business. So I honestly, I'm very, very bullish on this region, and UAE in particular.
From your personal perspective, I mean, you have a fund in Arizona that you invest out of. You have Thiel Capital for investments. Do you have a particular sectorial focus or area that excites you in this current environment, or is it any good companies that they're able to survive at this point? You know,
it's a question that comes up a lot. Nobody has a crystal ball. Elon doesn't have a crystal ball. Peter doesn't have a crystal ball. I certainly don't have a crystal ball. Everyone talks about AI. I think AI is going to be ubiquitous. It's going to be pervasive. Guys like Sam Altman, who's a friend, you know, they're going to run the kind of the superpowers in the AI space. But AI is going to come in. So with the Arizona fund as an example, I think we've made 12 investments or thereabout so far. AI is a central component with 8 of those 12 investments. And so whenever we make an investment now, we ask, how is AI impacting your business? And if they don't have an answer for that, that's not the right answer.
Fair enough. Here we see, if we can touch on this subject just a bit, there's a little bit of competition around the whole of the region of where you need to be headquartered. I've always wondered, do you have that same level of competition in the US? Do people actually have to be headquartered in Silicon Valley, or really people don't really care? As long as you're operating cross geography, it's not about where you're locating, it's the market in which you're servicing.
Yeah, this is one of my favorite topics. So when we sold PayPal to eBay in 2002, I got out of California because it's a very onerous state in the US from a tax perspective. So I moved to Arizona because I had family there, and so I've been a happy resident there for 22 years. And so this is one of my pet topics in the sense that in the US and anywhere, human capital is mobile. I mean, this region is a very good example of that. And in the US, I think with the pandemic in particular, it reinforced the idea that if you're an entrepreneur, so if you're a young graduate from Stanford, you probably have to go make the pilgrimage to Sand Hill Road to try to get your first check to start your next Google or Facebook or whatever that is. And that's fine, that's never going to change because you can't move Stanford. But what you can move is that entrepreneur that's already had one good outcome. And they're living in Menlo Park, and they're living in a shoebox of a house, you know, wife and 2 kids, and it's literally a 2,000 square foot house. And you literally could say, you know, take out a map of the United States or the globe and throw a dart at anywhere you want, and you can move and basically save 2x, 5x, 10x, depending on where you move. And if you're a talented entrepreneur that's already had a good outcome, for venture capitalists, you're the golden goose because it's all about the entrepreneur. It's the jockey, not the horse. And so if you want to move to Scottsdale, where I am in Arizona, or you want to move to Park City in Utah, or you want to move to Dubai, or it doesn't matter. If you're a talented entrepreneur that's already had a good outcome, capital will come find you.
It's interesting. We're going to do a founders report for MAGNiTT to try and identify the traits. And there's a great book, Super Founders, by Eli Tamase. I'm not sure if you read it. One of those key points are that serial entrepreneurs make for the best entrepreneurs because they've been able to kind of learn from the successes or failures that they've had historically. In terms of the PayPal, the Kareem Mafia that we mentioned here, I think there's now 100 plus startups that have been founded as a result that comes out of the Kareem story. And I think there's an interesting generational shift. Founders in the region tended to try and create startups for a country. Kareem and Souk gave the example of founders that were looking to operate at a region. And now we're beginning to see companies look to try and go global from the region. Any advice on founders that are trying to go global from the region in terms of cherry-picking geographies in which they should try and operate?
Yeah, no, it's an excellent question. I was talking to an entrepreneur locally about this a few days ago, and he was lamenting the fact that young entrepreneurs in Africa was the context. That, you know, if you have a smart young fellow from Kampala who's, you know, Rhodes Scholar, very, very smart, so he knows Uganda forwards and backwards, and he has a startup and it does very well in Uganda, but then he wants to go to Kenya or he wants to go to Nigeria. These are very different places, just like Saudi is very different from here or from Qatar and so forth. And so it's hard. And so as an investor, I have a strong preference. It's not dogmatic, but I have a strong preference, like you just said a moment ago, for someone who's been an entrepreneur before. Doesn't necessarily need to be outrageously successful. Even if you fail, that's fine. But at least you know you have kind of the temperaments. You have the intestinal fortitude to be an entrepreneur. Because, you know, some people should go work at Ernst & Young. No offense to Ernst & Young, but you should go work there, and you start as an analyst, and you can become the CEO in 30 years, and you just go from A to B to Z at some point, and it's a very structured career path. Whereas being an entrepreneur is like this, and these bits are near-death experiences, so it's very hard. So going back to your question, it's very difficult to take a concept that works here without scale and taking it outside. But to the extent that people can do that, that's the next logical step in terms of how this ecosystem will do, but it's hard. It'll happen, but it just takes time.
And I think a final question, because I see a big time up, but I'm not sure. Talent, we talk about talent a lot. Obviously, there's a huge cultural mindset in the US of startups. You have universities that are fundamentally supporting in coding. Here in the region, specifically in the UAE, a lot of the business mindset is here, but the tech talent can be found elsewhere. Is there anything that needs to be done to further encourage the migration of talent to the UAE, or is it fine having satellite offices for coding, business operations here, and then multiple jurisdictional development of operations to be successful?
So I think, in my opinion, the answer is the latter. I think it's completely fine to have your engineering team outside of UAE. They can still travel here very readily. That's fine. And then hopefully once they travel here, they realize it's a very good place, so maybe they want to move here. So that's where I would start. And I think really more importantly, perhaps, is just the cultural element. And so I think one of the reasons why the US has been so good at entrepreneurism and tech in particular is that there's no scarlet letter when you fail. So, you know, in certain European countries that will go unnamed, if you fail, it's just you're a pariah. And so the more that you can embrace tolerance for failure, which is what being an entrepreneur is all about, that's the biggest thing. And then, you know, the UAE has done an amazing job culturally just being so open and so progressive, and that's a huge advantage, especially here locally in the region.
Jack, thank you very much for your time. I think time's up and we're getting told to move on. Thank you very much for your time and thank you for the insights.